How to find and move an orphan account. If you're in the insurance industry, you have probably made a good living by focusing on two products, annuities and IULs. Both of these are great products when used properly, as they are essential retirement vehicles. Annuities provide a guaranteed pension and usually require a large sum of money to be transferred, while IULs depend on the client making monthly or annual payments into the plan with cash. However, when I talk to agents, I find that they get hyper-focused on these two products, not realizing that there are other funds that could be easily moved. But since these funds don't fit the annuity and IUL model, the agents just ignore them. This is where I can help you. These smaller orphan accounts are typically retirement funds in an old account. This type of money is perfect for life settlement investments. This video will show you how to identify and transfer those accounts. What is an orphan account? Simply put, an orphan account is an account where your client has funds and no advisor is overseeing them, nor is it associated with their current employer. So you meet, say, John Smith, who's age 55. He's worked his current job for 3 years and has $50,000 in a 401k. He also has $250,000 in an IRA with an advisor. However, he mentions he still has a $25,000 401k from a previous job, and it's just sitting there. He never got around to moving it. If you were solely focused on selling annuities or IUL policies, you might overlook this valuable clue. However, that $25,000 in his old 401k is an orphan account and is an easy opportunity. Consider this. John Smith is essentially saying that he's just too busy to move that account and that no one is managing that money. Moreover, if it's in a 401k, you can make two reasonable assumptions. First, the money is in the market, and because it's in a 401k, the fees are very high. Second, these are reasons to make your case for life settlements. Life settlements have zero market risk, so they provide diversification. By putting the old 401k into a self-directed IRA, you will significantly reduce fees. How to recognize an orphan account. As an advisor or agent, you typically conduct a fact-finding or needs analysis to review your client's financial situation. As you go through their large accounts and cash and budget, it's important to ask if they have any old 401ks, 403bs, 457s, deferred comp plans, or smaller Roth or traditional IRAs. If they do, then look deeper and ask these key questions. What type of account is it? A 401k, a 403b, 457, deferred comp, Roth, traditional IRA? What is its estimated value, and who is the custodian? With just these basic pieces of information, you can formulate a plan. At this point, you can explain to the client the advantages of moving this orphan account. First, we can diversify it away from market loss. Second, they will now have a financial professional, which is you, overlooking the funds. And third, their fees will be significantly lower. These are all positives for the client, and since it's an account they weren't emotionally invested in, your explanation should make logical sense. How to move funds. No matter what type of account it is, the first thing you need to do with the client is call the current custodian to find out the process to transfer funds. I will now walk you through how most companies require fund transfers based on what type of account it is. Traditional or Roth IRA. What is a traditional or Roth IRA? Traditional and Roth IRAs are both investment options for retirement savings, with the key difference being on how they are taxed. Traditional IRAs provide a tax deduction or contribution, but require taxes on withdrawals, while Roth IRAs require after-tax contributions, but provide tax-free withdrawals. Other differences include contribution limits, income requirements, and required minimum distributions. How to move the funds. The process for transferring traditional and Roth IRAs from one custodian to another is the same, despite their different tax treatments. The current custodian usually accepts the transfer from the new custodian, such as IRA Club, a self-directed IRA company that is well-versed in the process for most custodians. It's essential to ask if the custodian requires a signature guarantee, as it may be necessary for some transfers. Once you know the rules of the IRA custodian, you can contact IRA Club for assistance with transferring the funds. 401k. What is a 401k? A 401k is a retirement savings plan offered by employers that allows employees to contribute a portion of their pre-tax income to the account, which can grow tax-free until retirement. Employers may also offer matching contributions. 401k plans have investment options such as mutual funds, and there are annual contribution limits and penalties for early withdrawals. It's a popular way to save for retirement and can provide tax benefits. How to move the funds. Moving a 401k from a previous employer is usually fairly simple. The main difference from an IRA transfer is that you need to reach out to the 401k custodian to fill out their paperwork, or sometimes they will do the transfer by phone. Their standard practice is to send a check to your client's home made out to the new custodian. So with our John Smith example, if he was with Vanguard IRA with his name listed exactly as John Smith, you need to also open an account at IRA Club as John Smith. So when you talk to Vanguard, you tell them to send the check to the address it's made out to IRA Club FBO John Smith IRA. This will be a direct transfer with zero tax implications. Again, give them the address of your client. It is the best and cleanest way to do a transfer. When your client gets the check, they just overnight it to IRA Club. 403b or other retirement funds. What's a 403b? A 403b is a retirement savings plan offered by a nonprofit organization, allowing employees to contribute pre-tax income to the account with tax-free growth until retirement. They are very much alike a 401k. So how to move funds? 403b plans can be complex, but there can be additional issues with other types of retirement accounts such as 457 plans and deferred compensation plans. One of the unique features of a 403b plan is that it typically requires a third-party administrator, or known as a TPA. This can add on another layer of complexity and potential confusion for plan participants. So here's how to deal with it. First, you need to determine who is the custodian. Once you and the client have identified the custodian, you can then call them and explain that the client wants to transfer their funds to IRA Club, the self-directed IRA. The custodian will almost always require the necessary documentation to be filled out. Once you have obtained the required documents, you will need to mail them to the third-party administrator, or TPA, who will sign off that the client is no longer employed. Although it may seem archaic and impractical, this is the standard process for transferring money to an IRA when dealing with a 403b. A big tip to keep in mind is to obtain full details of the third-party administrator when speaking with the custodian. This includes their address, phone number, email, and any other relevant contact information. Once you have this information, reach out to the third-party administrator, or TPA, and obtain the contact details of the person you'll be working with. It's essential to follow up with them on a weekly basis, as they have little incentive to rush this through and complete the necessary tasks. Consistent pressure and follow-up are crucial to ensuring a successful transfer. When it comes to other types of retirement accounts such as 457s, deferred comps, or TSPs, which is a federal program, you will need to contact the respective custodians to understand the specific rules and requirements. The good news here is that we have been handling these types of accounts for nearly 2 decades. We have experience working with every type of retirement account imaginable, so contact us and we will guide you through the process and help you take control of any orphan accounts. Thank you so much for watching this video, and please feel free to get in contact with us at any time.